We talk about multiple targets for the S&P 500. Since the breakout from the bull flag, gap up, we talk about this gap level as a first target and the axis line, gap level, and followed by this axis zone. Each level, we see a bit of the reaction. For example, this axis line, there is this immediate rejection tail showed up, but that's only for one day. Next will be this gap. There's a little bit of the reaction. Here is axis zone, and we get a bit of the reaction, but look at this reaction. This is a shadow type of direction that signal a continuation to the uptrend. Next level is the level I have been emphasizing, which is around 58, 60, 70. This is the previous support. Once it's broken, here, tested first time, get rejected, sharp sell-off. That is the second time. That's why I emphasize this zone as the meaningful zone where a lot of traders will be paying attention because that's such an obvious level. Having said that, I don't see any form of the rejection yet. Yesterday was a bullish momentum day, gapping up, big spread bullish bar, localized increase of the volume, not that threatening. We didn't see tons of the volume pump in, and nor the selling action yet. That's encouraging. Nothing has shown any red flag yet. As long as this zone is holding up, the zone is from 5700 to 5870, so somewhere around here, that is the support zone. As long as the zone is holding up, we should see continuation to the upside. Means even if we get a rejection from this level, a pullback, and it has all the right to test or even fill this gap, dip a little bit slightly below 5700, bouncing up and down, consolidate, testing a little bit. That's completely normal. As long as this zone is holding up, we should see further upside and break out from here and into this previous all-time high level. That is the most bullish case. The bearish case will be this trading range, which I've been talking about. If we get a sell into strength, the bear started to attack at this level. Big bearish bar shown up with spike of the supply level and commit below, followed by inability to rally, struggle above 5700, then it's likely going to come back to test a few more levels below 5500 or even this level 5300. There are a few more levels that act as support. The swing is up. Immediate direction is still up. I did not see any form of the pullback yet. Today's action will be quite critical, or it could stay quiet for a few days until Powell came out to speak for the market to react, or waiting for some form of other catalyst or events. This is relatively bullish. We already examined the market breadth from the long-term and also the short-term point of view. The previous analog that I discussed, the 2011 analog, doesn't apply because that is depressed market environment and the market breadth is suppressed and we have little stocks participate in the rally. But this is not the case. This rally looks a lot like the 2019 during the Christmas sell-off and the V-shaped rebound. Although the context is different, let's take a look at 2018, 2019, December 18. That is something we could refer to as the analog, although the context is different because this is a shakeout or a deep spring. The trading range already formed since January 2018. During the Christmas of 2018, there is a breakdown, sharp sell-off, and followed by a rally, a test, and recovery, consolidation, and then keep rallying up. We are into this level. That's acted as the resistance level. In 2019, we get a pullback, followed by a breakout and a retest. Finally, take this resistance and change it into support level. And the rest is history. We need to pay attention to whether we'll get a spike of the supply level. Second, whether we'll have a big bearish bar. Most importantly, this zone will need to hold somewhere around here, 56.80 all the way to about 58.70. That is the zone that I need to see the price is holding up strongly. If it could consolidate here to build a right handle, is constructive for it to break out and to go up to test the previous high. If suddenly we get spike of the supply and resume of the volatility because the tariff is still not yet resolved, then it's likely for it to go all the way to test 5,500 or 5,300. These are the two levels to watch out for. Immediate direction, we should see attempt to rally, attempt to go up. We need to pay attention to whether we'll get a sell into strength or sell on news, because the positive news between the tariff, China, US, come to a temporary commitment. So both sides agree to about 90 days pause. Meanwhile, they will take some time to negotiate. At least we got some buffer 90 days between China, US. So far, no red flag yet. Everything looks constructive, still bullish. Swing direction up, immediate direction still up, unless this bar is getting violated and filled up the gap. Even then, we still have the bullish scenario to consolidate within the zone. Bear case will be violation of the zone and to go down from here to test 5,500 and 5,300.